everyone. Today's Sunday, April 30th, and Michael and we always have a market review every Sunday, and we're going to go over the key economic events, some of the biggest earnings that's coming up that might affect the S&P 500 movements, and maybe some setups that we're looking at or opportunities and the ranges of possibilities for this week. Okay, so Michael, you can start it off.
This chart. This is the S&P 500 seasonality chart. It was updated December 31st, 2022. So this is probably the most up-to-date chart for the past 20 years. Okay. So let's just ask, from January, February, March, April, right? That's pretty much what happened this year. Let's just compare the chart quickly. If we do the weekly chart, 1 week chart from January, right? So this is January here, right? Right here, January. Let's go. This is right, January, March, April. So up to here, there's resistance. Okay, so it's been range bound. Okay, so seasonality, January to March, it was range bound, and then April, the seasonality broke out, right? But in May, it's showing that it's a big pullback coming. Look at what's May showing. All right, that's the seasonality. That's what statistically the market's telling us what happened in the past. Hypothetically, the technical analysis should price in everything in the market. So it got rejected here back in May 2022, got rejected here in August 2022, and got rejected here in February 23 when we touched here. And we touched it, basically. We touched the 20, basically. So now we're in April. So even if we squeeze up, let's say we squeeze up to a high of 430 for some reason, I suspect we're going to get rejected and come right back down under. Okay? So, because that's what the statistics is showing. But later I'm going to try to show you that fundamentally that's what the market is going to do as well. Okay? So that's the monthly chart. We can see this resistance. Okay? Right. So here's the weekly chart. Right. Weekly chart. Okay, so that's the 430 line, keeps getting rejected there, right? Rejected there. And now we're this S&P 500 is facing this resistance up here. This little bump. Okay. It needs to clear this and then it can go to 430. Okay. So it needs to clear this wall. The height of this wall is about 418, which is right here. We can see it's 418.30. We went to 416, so we have 2 more points up. So does that happen this week? I could say it's possible that we go to 418 before we crash all the way back down. Okay, and I think on the way down, it could. I'll give you the possibility in 1 week it could be this big red candle. It could go 15 to 20 points down in 1 week. So just be cautious of that. And if that does happen, markets, we're like, hey, look, guys, the market's bleeding. Let's just go puts and hold our puts for a really long time and make all that money. Okay. So the bottom of the range for the SPY is 380. But I think for this week, my target, and my target is under 400. So the 400 is right there and into this 395 test. So we're going to test the 400 level, and then 395 would be the test. Market review last week, I kept saying I think the range is going to be 416, 418, and I held my conviction that it was going to that level, and it did. So, and it's not always correct, right? But here I think the market's going to do a pullback. Okay.
Okay, so I'll just show you what's going on with what I'm seeing. And basically, here's a little recap of what happened this past year. And the reason I'm talking about a whole year is because we're in a full year cycle now from last quarter 4 earnings, right? Last year into this year. So if you look at hold on, sorry, go back. So valuations is based on year-over-year growth, and look where we are. This is like end of 2022, 23. Okay. Like this is 2021. Okay. Look where we're at. Like it went to 2021 and then into quarter 4, which is quarter 1 earnings. 2 years ago, before all that COVID, whatever rally and everything, that's when it started breaking out, right? But we're exactly almost at that same place. Like this is March, right? Is when it broke out above this area, which is 400, and just come back to here. Oh, what do you know? March broke out again over 400, right? So if you look at just like a very long-term kind of like, okay, we're back at this key level, but now all PE levels are back to normal, like in the 20s, 30s, 40s, right? Instead of in the hundreds. Like where it used to be. So I'm like, okay, they can say it's like a recession, but then I'm like, these companies were making money this whole time, right? So it can't go down more than a 2 years gain in revenue, right? Even though EPS is down a little bit, what happened to all the revenue then? So I think it's actually valid that it holds this level, considering we're back at where it was 2 years ago. So if that's the case, okay, so from there, now I'm just showing you what I'm seeing, okay? From the October bottom, this was when there was the most capital outflow in the market and inflow going into the end of October, and you could see what happened, right? This is 75 basis point hike fear, whereas this is true valuation earnings report. Quarter 3, right? Sorry. Quarter 2, quarter 3, and then now into quarter 4, we stayed above, meaning, okay, they think that it's going up ever so slightly, right? This was the dip, then here, it actually starts from here, then higher, then higher. So we're creating higher lows, right? So if it does keep pulling back, like, okay, yeah, well, Michael said 390, 387, I've been saying it could go down to 388, right? 388 if you just look at here. So let's say we find the major area of the quarterly support and we see a big drawdown going into May, June, like maybe May, we can see this area, right? 388. But if we continue, but considering this is not the greatest quarter, like I keep saying, it's very, very still possible that we hit into the 421. And on the near-term range, if we do see some downside, 407, and then maybe even like 404. So why those areas? Okay, so I'm going to show you what happened this week. If you look at just like key areas, right? This is what the support was from Friday last week. This is last week, Friday. Support, and boom, it broke down. So what I did was I figured out the point change from the support to where it dropped here, and I got this exact dollar change, and then I flipped it onto the upside, and that's what it created. So I kind of went over this on Friday, and I charted it out for those of you that might have been like a little bit more biased towards a certain direction. But if this is a Friday close, this is something that you can always like gauge. Like say it makes a drastic move in one way, you know, if it reverses, you can always kind of like use this strategy to figure out, hey, if we're trading against computers and they're just trying to decay time or trick us or whatever, like that's their whole point, right? They have to win against us, is figure out what's possible, and then when it's going to the reverse side, use that possibility for the upside or the reverse side, right? And from here, the expected move, 6 points, right? I said 6 points is a very small expected move going into the following week. I said that last Friday. From here to here, what is it? 6 points, right? It made the exact expected move from support from here to here, as well as from here to here. Does that make sense? 6 points up, 6 points down. That was set in the expected move. So if we look at that now, and we're like, okay, let's look at the expected move for this week. This is not opinionated. I'm just showing you what I'm seeing. Okay, now it's showing 7.23, right? So if we use that same strategy, 7.23 into the expected move for this week, using maybe, let's say this is the support, right? Because this is just like like all of a sudden, like after hours gap. Then what does that do? 7 points from 414 brings us right to 421, which is my next major Fibonacci level, which is a big earnings channel actually. So I always talk about 29 points movement on the SPY. So if we have bullish sentiment towards FOMC where rates possibly might go down and Apple goes up, then we can possibly see 421. 418 to 421, I'm thinking, if we do the full max move. But if we use this level, and we also get the expected move of that 7 points, where does it bring us back to? 407. But if you want to trade into a nearer term range, I would just use 3 points because SPY always makes at least a 3-point move up or down within 2 days. Does that make sense? So just statistically speaking, without an opinion or bias, let's say the market starts reversing off this 414 area, which is a huge Fibonacci level. This crossed when Microsoft crossed 302, by the way, or like 30, what was it? And Apple started going over 165, right? 167.50, sorry, 167.50. So I would kind of like use those, you know, and it's showing 2 points into tomorrow, 3 points into Tuesday, 5, almost 6 points into Wednesday. So we know the bulk of the move is going to be Wednesday. And then it shows 650, right? What if it goes 6.5, 6 points up, and then 12 points down? That's very, very possible, right? So May 4th is Apple earnings. So just know that just because it's going in a consecutive order on the options chain expected move doesn't mean it's going to go straight up this way. It could go up 2 points from Friday, then down 3 points from Friday, meaning down another 5, 6 points, right? Then it could go up another from Friday, all the way back up from wherever it pulled back from. So just keep in mind, any of these moves could be both up or down from the Friday closing price, which is, I would actually use 414 because that was a major support area. Like you see this? This is where a lot of the volume is. Andrew uses this on like a sideways chart just to be more neutral, right? So if you want to kind of gauge it off of where most of the volume is, you can use this as like a reference number.
Make up the SPY. Okay, so Apple. Let's look at the Apple chart. Apple kind of did this in sector rotation yesterday. Yesterday, it feels like it's a big cup, right? Feels like this is a big cup. I mean, it really depends on how. It really depends on your time reference, right? Was this a big double bottom? Like, who knows, right? But to me, it feels like this is a big cup. And if this is the resistance here, this level, right, all the way up to here, there's some resistance, right? All in this area, there's resistance, right? Okay, so I'm just showing you the consolidation. Like, okay, so this SPY is moving into this area again. No, Apple's moving into this area again, usually before it pulls back, and this is on the daily chart. So just give you some reference here, right? And when it breaks into this, it can go 1, 2, 3, 4 days, maybe 5 days, and then pulls back. So into this move, like 1, 2, 3, 4, 5 days before it starts coming back down. So even if probability wise we break into this and this whole week for somehow Apple's green every single day, plus because Apple does have earnings, I mean it can get to 175. That's the high range. So if Apple can get to 175, the SPY could probably get to 420 at the highest. But I do think the market ends red this week. So the weekly candle will be red, in my opinion, because we're facing so much resistance up here. Okay, so up until there, and then right back down. And then I think Apple's low for this week could easily be under 165. most likely, and then 160, and then 157 even for end of this by Friday. Okay, so we'll play it by ear. That's the range for me for Apple. Apple, because Apple has earnings this week too.
So let's say we think it's a possibility that SPY goes here, right? Then where does that take me? I align all my individual stocks to the SPY chart. Like you can tell, right? Look, almost this kind of went a little bit more under than here, but this is within the same time frame. So you see how this is uptrending, but why is this one flat? And that's because Apple is growing, but other companies have to come down in order for Apple's market cap to actually increase in value, because this has such a heavy weight, right? So this has to go up and this has to be flat. That means all these like other stocks, like maybe Amazon or like some other weaker stocks like energy or whatever, has to go down in order for Apple to go up. So it makes it neutral. So that's when, you know, you see different sectors balancing out. So for Apple to keep going up, that means SPY actually has to be somewhat flat a little bit. I was saying 171, 172 for Apple. That would bring SPY to here. So all I did was go to NASDAQ.com, put in Apple, go to earnings, right? And then now they're going to tell you what their expectations are.
Mm-hmm.
So you can see Q4 last quarter, why it rallied, right? So you compare this. So this is what I do. I put my chart side to side because I want to see a comparison of how the earnings looks like compared to how the chart looks like. Right? So this is Q4. I'm always just looking at support. I'm never looking at the resistance first. Up here, right? This is the next quarterly move. Right? March into here. So I think this move already kind of like almost happened. So it could be priced in and then pull back to this area. They've been still growing, but look what happens every year in the June earnings. It goes down from March to June, right? EPS. And you can see that in a lot of their EPS history, that every June, Q1 reports, it goes down. So quarter over quarter, Q4 into Q1 is pretty weak. And I think that a lot of this sentiment is towards more FOMC and rate hikes, right? So that's why I'm saying this week is going to be really tricky and volatile, because it could be towards positive sentiment on FOMC. But if actuality this happens where it goes down, then you could see some volatility to the downside. And if it was 162 for Apple here, that means where does it go for SPY? It'll probably pull back to 407, right? Maybe 409, 409, and then 407. So just keep that in mind. That's why I was saying 421 to 407, as well as look what happened. See this line too? It hit this exactly. This was that 169 target I had. I already had this pre-planned too. It's nothing like all my targets. The reason why they hit, I planned it for years. Like I planned this months and months and months ago, since like half a year ago, right? I've been watching this trend and I'm like, oh, okay. My 169, like my after earnings target actually was 169, but it got there before. So just be aware that, you know, I'm also following trends. The only thing that would break this is, hey, rates are going down, right? So that's all up to Powell that nobody knows. Nobody knows. So on this case, if it pulls back to this area before earnings into the 165, which I believe it's possible, I would hit into the 169 again for 2 weeks out, right? So if you want to trade the short term, or you could just find some long opportunity after earnings is reported, because you already know what's going to happen, right? If you want to see the expected move on Apple, it's showing 7 points, right, on Apple, which I kind of went over this already. 7 points on Apple to the downside brings you right back to this area, right? So if now we're like looking at Apple 7 points at downside, okay, so what about 7 points to upside, right? So 7 points up from, let's say, this major volume area, like 168 or so, then it brings us to what, 175? It's gonna chop. I think it's gonna go up to like maybe 172, 173 if we hit like a high.
Yeah.
It's possible, right, for this week? And it's possible also to pull back to 162 going into 1 or 2 weeks, because we've already been channeling up into earnings and it's made somewhat of a big already like move up. So if you look at these waves, you know, even if it just keeps continuing, so let's just pretend this wave continues, right? Like what's going to happen? It's going to go like this, right?
Yeah.
Does that make sense? Because you need some pullbacks and then you need it to rip. So this is like, okay, between here and here, it's like 2 weeks, right? Does that make sense? So it doesn't mean that Apple's going to tank. It just means, hey, you know what? We're going into a little bit of a weaker quarter. It's still growing, like uptrending, but we could possibly see a pullback because, you know, into May, there's still rate hikes coming. So once we see the peak of the rate hikes, I feel like that might be the pullback day. And then we get to go up into June, July. So just be careful this.
They're saying May could be the peak of the rate hike. Here's the triple Qs, okay? The triple Qs, in my opinion, has made a huge ass cup, and in a sense has created the handle, I would say. Right? It's like if we have to draw the cup and handle, it has created it. So this is the only chart. And okay, you know what? Just for the sector weightings, unless we know off the top of this top 10 holdings for the Qs, this has created the cup and handle formation, right? So this, if we follow this Q's cup and handle formation this week, the Q is gonna explode, is what this chart is telling me. It's right. It's like even the setup is crazy, right? The market pulls back into the moving average and holds above the 50 and reverses. Like the selling pressure is low, so all the technicals point to the Qs being extremely strong this week. But if we look at the holdings, Apple's earnings is like this is the Q's holding top 10 holdings. Like this is basically the FANG, right? And I'll give you the reasoning why. Okay, it's possible that the Qs could break out here, even on a week red week. I'll explain why. Okay, just give me 1 second. Then Esther can agree, and you guys can agree or disagree with this, right? It's just when the market sells off really badly, institutional investors are not selling. Like institutional investors, like Warren Buffett, he said he's not selling his Apple position. Like the multi-billionaire hedge funds are not selling their Meta or Amazon. These are their staple stocks, right? They're not selling. They're these major positions. If anything, if there's an opportunity, they'll buy these dips. In my opinion, it's possible. It's possible. There's an argument there for it. So this chart looks bullish. Okay, so I will just leave it at that. This is the only.
I completely agree. I'm not selling my Nvidia. I'm not selling my like long-term position.
So it's like so here's what I'm saying. This is the only chart that I'm seeing that's like, hey, look, this we could end green because the Qs look so strong. Okay, so if the Qs somehow break out, then yeah, let's watch this as a proxy for the whole market going up. But like we talked about last week, like yesterday or whatever, XLK technology is at resistance, right? Technology is at resistance, and technology is actually resistance. XLY discretionary is trying to break out. It could start to break down because there's a wedge, right? So the Qs, if we study the Qs, I'm gonna say technical analysis basis I have to say this looks like it's breaking out because this is what the formation is showing me. But my instincts, just like human instincts, tell me the Qs are gonna sell off. Does that make sense? I don't know if that makes any sense. Like, because the formation is just so strong.
Okay, so I have it charted out. I have everything charted out, but this again aligns with growth rate. So the fans are the growth rate, and these are the quarterly channels, right? So now that it crossed over here because Microsoft was so strong and Apple was so strong, but it's trading exactly inside this channel, right? So if we see Apple again go to 171, I'll tell you this is going to go to 325, 326, right? Everything in my charts align with each other. So if you just want, look, like if someone was like, hey, Esther, can you show me your chart on QQQ? Do you see how easy trading would have been this week? Right? If you're like, does that make sense? It's already like there for you. This all is calculated based on algos. Like I already did this like years ago. So just ask me for the chart. And then if it pulls back to 162 on Apple, that's going to bring this back to 310 if Microsoft sells off. But I don't think Microsoft is going to sell off unless FOMC is like, oh my God, we're going to raise rates a little bit more than you thought because market's ripping, right? And they just want to crush it. But if it doesn't, and we're just like neutral and like what they said, then this whole 318 area is a very it's like a mean trend line that you could just kind of see how it's been following, right? The expected move that would be into this week 7 points. 7.50 from here, right, is 326. Oh, what do you know? How interesting. And then 7 isn't that weird? 318 put minus 7 points is a little bit like almost here, right? So you could just almost like use this channel as the major volume and then 7 points plus or 7 points minus. I'm actually thinking up, down, up, and then down, and then up, like, but somewhere in this. So if you want to trade this and you don't know which direction, right? You know what you could do? I'll give you a strategy where, like, say you don't have time to day trade, but you want some of the volatility. You can get Friday expiry and target both areas, and you can scale out. Once it hits one area, you close one, and then it hits into the other area, and then you close that one, right? So if we're thinking 311 into 326, right? 326. Okay, this costs a little bit more, so you're gonna want to wait for like a pullback to buy this one, and maybe like right now or something. That's a little bit high actually. Let's go to 318 just in case, right? Because that was the yellow line. So if it's early on in the week where we see it go up, then I would get the 318. If you see it break down under 318, at least you know, hey, it could go down to 311, right? So you have two areas for the puts and one area for the calls. This is what I would suggest. How to trade it.
So should we cover the calendar? Okay, so the key dates, like job openings, is going to be really important on Tuesday. So that is like the only slowest day is Monday. Even manufacturing data is important because you know what the funny thing is? Manufacturing data, every time it goes above 50, when it shows 50 and above like 55, it shows the market is expanding. We want it under 50, just so you know. Okay. The market wants it under 50. So, okay. So tomorrow, and then job openings. We want this number. This number did tank last time, but the market rallied. So, all right. So, job openings is going to be important at 10 a.m. So, I wouldn't be trading SPY options. And sometimes I'm trigger happy, right? We trade it. We don't want to trade anything until 10 o'clock, until the spike happens. It comes out 10. And then, Fed chairman is at 2:30 on May 3rd. Okay, So that one, I'll write out a daily ranges. Like I'll write out a full, like even more deep, a bigger analysis on that day for you guys to read, and I like give you some options of what I'm thinking will play out, how it plays out. There's a couple scenarios how it plays out, right? So I'll write them out for you guys then. On Thursday, not so important, but Friday, the unemployment rate. I suspect we want the unemployment rate to go up, right? So we'll see if it goes up or not. So all right, so that's the calendar.
Have a good day. Bye.